When your options are limited, so are your opportunities. At Cboe, the global exchange that pioneered options trading, we offer more ways to move with the market. From VIX and SPX options to global market data solutions, Cboe helps investors diversify, manage risk, and stay ahead of whatever the market does next. Cboe. Life is better with options. Your investments could be too. There are risks associated with Cboe company products. Review the disclosures and disclaimers at cboe.com/US_disclaimers.
The views expressed on this podcast are those of the participants, not of Reuters News.
Depending on the actual content, a peace, again, I don't want to call it peace, but a truce agreement would mean even more spending, even more European rearmament, because it would crystallize the fragility and the instability around Ukraine's eastern borders in the best scenario. And so we're not facing de-escalation at all on that level, but continued escalation and, if anything, faster escalation.
Donald Trump seems intent on bringing peace to Ukraine. But the proposals on the table so far involve Kiev accepting the loss of two key regions. And far from removing the threat from further invasion, this capitulation risks destabilizing Europe. The economic consequences of this version of peace is the focus of this week's Viewsroom. It's Amy.
And it's Jonathan, and this is the Viewsroom, the weekly podcast that invites you, the listener, into a lively debate with breaking views columnists about the knottiest issues in business, corporate finance, and economics. So, Amy, there's to say there's been a lot of back and forth would be an understatement about a potential peace plan. Donald Trump obviously seems intent on drawing a line under what he's rhetorically positioned as the failures of the last administration. The whole idea of can we close off and finally bring an end to the absolute carnage that we've seen on Europe's eastern flank is the question of the day. But what's the thinking in Europe about the current proposals? Because it seems like there's basically a feeling that this has gone completely off the rails, right?
Yes, I think that is fair. I mean, I'm actually in Ireland where Zelensky is visiting this week, and almost every single question was about what are his views on what could possibly come about from the meetings between the US and Russia about the future of Ukraine, which in itself is kind of comical that Ukraine is not involved in these discussions. And I suppose listening to Zelensky talk, it seems like his biggest concern, obviously, is that some sort of peace deal is brokered, and then it just allows Putin to reload and start again in a year's time. So I think that those are certainly the risks for Europe as well. But fortunately, we have our two guests who have been looking at this from quite different angles. So we have Pierre Briançon, who is our resident Ukraine expert, who also lived in Russia for some time. So he is very knowledgeable on this region. And Yawen Chen, who covers oil and gas, which is obviously a very key part of this story from an economic perspective. So Pierre, Yawen, you are very welcome.
Great to be here.
Glad to be here.
So I think we have to preface this whole discussion with the fact that we are recording this on Wednesday afternoon. So it is possible that something comes out of discussions between many different parties, but hopefully not. But Pierre, could you tell us what was being discussed between the US and Russia this week and why exactly it doesn't seem to be getting over the line, I guess, from Putin's perspective?
Well, the latest version of what nobody should call a peace plan, which was a vague truce or ceasefire project, was the original US proposal, which was actually itself something that Russia had written almost word by word 6 months ago, and which the Trump White House just took over and presented as its own, amended by changes required by Zelensky on suggestion of the European Union. So this was what was proposed, which Putin apparently rejected yesterday, last night. And so we are in a situation where it's very unclear what is now on the table. But the basic thing is that on the territorial issue that you mentioned, which was very, very important for Ukraine, Ukraine had already agreed to at least talk about it and freeze the situation as it is, meaning that Russia would keep control of almost two regions that belong to Ukraine. So this was the basis of it. What Putin has rejected is the idea that any ceasefire should be guaranteed by the presence of either European or US troops on the ground. And that's where we are now. And that's where the red lines are unlikely to be modified.
I mean, just to ask about that, right? Because I think there's when I speak to folks in Europe, there's a feeling of, effectively betrayal or something like that, in terms of like the outline scope of what the Trump administration has been pushing for. But if you're talking about troops in Ukraine or, some kind of like peacekeeping force or whatever, like, are we not just back to square one? Because I think it's worth like setting the terms of what people are positioning themselves over in like a real politics sense, right? Because the Russian line on what happened in Ukraine was always that it was this sort of encroachment on Russian, like, Russia's kind of security sphere, because there was this whole path towards potential NATO membership and yada, yada, yada. So, like, you would think that then accepting NATO forces in Ukraine stationed semi-permanently, like, it's just going to be a red line, right? Like, I'm just confused as to, like, being the ignorant American here, like, what are the actual realistic terms of a settlement here? Because right now it feels like everybody is very angry about everything that's being proposed, but I don't understand what the actual realm of the possible looks like.
If I was able to outline the lines of a serious peace plan, I probably wouldn't be here, right? But at the core of this, and you're talking about NATO, I mean, basically the guarantees that Ukraine and Europe are demanding, because no one believes in whatever Russia or Putin will pledge to by signing a paper. And so the question is, how do you protect Ukraine from further Russian aggression, even if some form of agreement, temporary or not, is found on the disputed territories? And that's why you have to find a way to reassure Ukraine and the rest of Europe that they're really protected against not only Russian further intrusion into Ukraine, but also against Russia's possible aggression against the whole of Europe. When you're talking about NATO troops, there's a difference between NATO troops acting under a NATO commander, etc., and troops from European member of NATO countries that might do the job as well. If you're talking France and Germany, who have proposed to do that, the UK as well, have proposed to send troops on the ground to guarantee or to monitor a ceasefire, that would be a different matter. Putin, however, doesn't consider there's a big difference there. As soon as any troop from a NATO member is in Ukraine, he has said he finds it unacceptable.
And Yawen, I'd love to bring you in here because there is, as I said, sort of an oil and gas element to all of this, right? One of Trump's bugbears is the fact that Europe is continuing to buy gas from Russia, which obviously he sees as problematic. But I just wondered, what are your thoughts in terms of what are investors in those markets kind of telling us about how likely peace is? Because I suppose maybe you could even talk to start, Yawen, about the different scenarios, what's likely to happen to oil if actually a peace deal is brokered versus if we continue as we are now.
Yeah, good question. I mean, you started with gas, right? I think gas is slightly different because the scenario that Europe will buy back Russian gas seems to be a pretty distant probability, even if there is a peace deal. I think that's the kind of current consensus where we are. Like, Europe really wants to wing off Russian gas by 2027, 2028. The US is actually benefiting a lot by increasing their exports to Europe. So there's a dynamic change here. And when it comes to oil, I think a few things are at stake here, right? First of all, you've got the sanctions on Russian oil. You've got the recent sanctions on some of the Russian companies, important exporters like Lukoil. And then you've got the Ukraine attack on critical Russian energy infrastructures like refineries, export terminals. So if those things stop, provided there is a kind of temporary peace deal, ceasefire, you can see potentially a lot more refinery capacity coming online compared to, say, crude oil, because there's a difference here because ever since the Ukraine war, Russia actually has shifted a lot of crude oil inventories into the sea. So even though like you've got all these sanctions going on, there is a lot of crude oil floating around at water, and they could move into landed inventory if sanctions lift. And if that happens in the short term, you might actually see a lot of inventory being unlocked, and that's quite different from, say, the refineries, because you probably need a lot more time to restart the kind of damaged capacity you have. And Russia itself is facing some kind of technical bottlenecks ever since the Western sanctions. So there's a natural decline in their production as well. So it's a really layered kind of product by product situation. But if you're just looking at oil prices in general, I think there was some expectation that this peace deal could happen. You saw oil prices dropping about 5% ever since Trump was talking about the negotiations. But we're still at around 60 per barrel, which is not really, something that's a shock to the market. And I think the market is still kind of expecting a lot of oversupply from OPEC countries, or countries from outside of Russia, the producing countries like in Brazil or in the US, which serves as a cushion. So the debate here, I think the oil price is an imperfect kind of gauge of the peace deal probability right now.
Right. Yeah. I always struggle to draw any kind of like narrative conclusions from what's happening to the oil price because, like you say, there's so many things happening at once, right? But I guess if we're thinking about overall, like, let's say we get to a situation, however it happens, let's presume that somehow a peace deal, meaningful, a kind of extended period of ceasefire is reached, and I would presume, I mean, Pierre, correct me if I'm wrong here, but I presume that eventually you would consider that some sort of off-ramp to like normalization of Russian market access, right? Like, what would we expect that to change about the market over the medium term? Because obviously, I feel like for Europe especially, but like for various parts of the world, like all these different kind of energy price shocks since the Ukraine war began have been like a big part of the story of what is going on in these economies.
Normalizing market access to Russia or bringing Russia back into the global economy fold basically is a pie in the sky. Is totally fantasy stemming from the original U.S. proposal. It supposes, for example, just to give you an example of why it won't happen. It was supposed that Europe agrees wholeheartedly with lifting the sanctions currently weighing on Russia, and they're especially if you're talking about the frozen reserves of the Russian central bank, they're much bigger in Europe than they are in the States in any case, which wouldn't prevent, I guess, the US from striking deals with Russia and lifting its own sanctions, but that would remain the same. If you have trouble, I mean, markets are very imperfect. A judge of the likelihood of a possible truce or peace deal. Defense stocks, for example, go down every time there's a rumor that a truce might be agreed on. Not seeing that, if anything, a truce would lead to increased defense spending for Europe and not lower defense spending, increased defense spending and faster. But markets, some market movements are pretty much determined by some retail trader in a dark basement in West Virginia and algorithms, so the deadly mixture of artificial intelligence and human stupidity. So
I'm curious as to whether you have the same sort of take, Owen, because like in that case, that feels like, I mean, long term, we're talking about continued issues for European energy access, right?
Yeah, and I think, I mean, just on a political and government level, this Russia, China, India versus maybe US, Europe, and this kind of energy alliances or political alliances have kind of formed already. It's kind of hard to imagine that once trust is broken, based on this very thing, peace deal, you're going to go back to Russian gas for like 70% of your supply. It's just unthinkable. But then there's the market forces, like Pierre mentioned as well. For something that's so globally traded like oil, if it's easier to trade, to transfer it from China or India back to Europe. They will find a way there if the prices are right. So we will see prices move based on those events. It's just, I think, on a governmental, political level, it's really hard to see things go back to where they were.
And to follow up on Johan's point, Europe is fine from an energy viewpoint. Europe would not plug back into the Russian oil or Russian gas if it had the opportunity to do so. That's why I think the idea that Nord Stream might come back, into production or this kind of thing are totally fantasies. This won't happen because Europe has moved away from that all. On the other hand, Putin has a vested interest in plugging his economy back into the global system because it's preparing for a serious slowdown next year. The Russian economy is exhausted. I remind you to come back to Yawen's points that Urals, which is the Russian crude oil price, was above $80 a barrel when the war started, and it's below 55 now. So we're talking serious shrinking of the only foreign resources for Russia, and they, of course, they can't sell it on top of that. But and so that's why it wouldn't make sense really to agree on a peace plan that would keep a destabilized situation, weigh on Europe's economy and on Ukraine's economy, delay the question of reparations and who's going to pay for the $600 billion plus that Ukraine is going to need if it ever finds peace. And so that's why I think again we are past that particular plan unless Russia makes concessions, and it's obviously not ready to do so.
I'm just kind of curious though, Pierre, on that, right? So if you think about it from Putin's perspective, peace is very expensive then, right? Because if your oil is already at $55 a barrel, and as Yawen just pointed out, that it's likely to go down further, right, if there was peace.
Sorry, it's about 62
No, but the Ural, right?
Yeah.
The Ural is 55. And then is that right? That there's a gap between the two. So let's imagine they both go down. And then you have to pay reparations as well if you're Russia. So you've got a very costly bill at the end of all of this. Can Putin, like in your mind, Pierre, continue as is? As in, does it make more sense to just keep going, even though the war is so costly? Can he keep going?
He can keep financing the war in Ukraine for another couple of years or maybe more. So the level of military spending doesn't need to increase now. Of course, it increases GDP, but they're making tanks that are being destroyed by Ukraine. It still counts as GDP. So, but the military factories are running at full capacity. They couldn't increase if they wanted to, and so they're. But again, Russia is cut off from Western financing or world financing, financial markets, cannot finance its gaping budget deficit, which is increasing. So it either faces, runaway inflation, or it has to clamp down and slow down the economy seriously. And so it's showing sign of exhaustion would be but he can still keep fighting and advancing in Ukraine as he has done.
I should also add that the oil production in Russia is organically declining as well, just because it's been underinvestment. There's technical problems due to the sanctions, and they haven't got much help. So there is a possibility that as time goes by, your production starts to fall more dramatically, and that's a problem for revenue.
Right. And I think no matter what happens with Russia and the peace deal at this point, I think, Pierre, kind of as you were hinting to, right, Europe is effectively going to be on a defensive rearmament kind of fiscal stimulus path anyway, right? We have the German budget passed. We have the beginning of these kind of spending taps opening. And there's no de-escalatory mechanism in that, right?
No, again, and depending on the actual content, a peace, again, doesn't want to call it peace, but a truce agreement would mean even more spending, even more European rearmament, because it would crystallize the fragility and the instability around Ukraine's eastern borders in the best scenario. And so we're not facing de-escalation at all on that level, but continued escalation, and if anything, faster escalation.
So peace does not seem, so I suppose actually, Pierre, peace is more of a truce And a truce doesn't get us back to where we were in terms of not thinking about massive defense spending and all of the issues that Yawen very nicely talked about with the oil market. So I think we'll leave it there. Plenty more to discuss, and hopefully we don't get trumped by news before this goes out. So Pierre, Yawen, thank you so much.
Thank you.
Thank you.
Thanks for tuning in. This podcast was produced by Cheryl Pena in New York and Gregory Garner in Toronto. You can listen to a new episode of The Viewsroom every Thursday on the Reuters app or your favorite platform. And don't forget to tune in to our sister podcast, The Big View, every Tuesday, as well as the other great podcasts from the Reuters team. If you like what you heard, please follow The Viewsroom and let us know what you thought. We have a new email address where you can send us feedback, which is breakingviews-podcasts@tr.com. And check out our views on the biggest stories in business and finance every day on breakingviews.com and reuters.com.
When your options are limited, so are your opportunities. At Cboe, the global exchange that pioneered options trading, we offer more ways to move with the market. From VIX and SPX options to global market data solutions, Cboe helps investors diversify, manage risk, and stay ahead of whatever the market does next. Cboe. Life is better with options. Your investments could be too. There are risks associated with Cboe company products. Review the disclosures and disclaimers at cboe.com/US_disclaimers.